Hey, what's up, everyone? Josh here with the Entrepreneur's Playbook, where we help 7- and 8-figure businesses ignite their financial superpowers. Here, as always, with Ron Parisi. Ron, how you doing today?
Yeah, great, Josh.
Good.
Looking forward to another great episode.
Yeah, so we actually
always a pleasure getting together.
We got a question from a listener for this one. We're talking about how we're always talking about this forward-looking accounting and setting goals, and they just wanted us to clarify what exactly does that mean, and how do you tie those two together with your budgeting and your forecasting and the forward-looking.
No.
What do you think? Should we tackle that one today?
Yeah, absolutely.
Cool.
I think it's a timely topic because for us at CPA on Fire, been doing a lot of goal setting for us, right? We had like unbelievable growth during the COVID. Our clients experienced unbelievable growth, and we hit a point now. I don't know if it's back to normal, but anyway, what's the next version of CPA on Fire? And what I find interesting is, because in this program, I'm surrounded by other entrepreneurs. And what the first thing, when anybody talks about goals, they always go right to gross sales, top line revenue, and maybe a profitability component to that, right? And then it seems like they write that out, and then they automatically go right to product service and marketing, and they throw any kind of tracking away for that top line revenue and profitability, and more importantly, profitability, right? Everybody you talk to any entrepreneur, they're the first to tell you what their gross revenue is, but really peeling back that layer, what's the driver? What are the 20% that's responsible for the 80% of gains? And I think that's marries with the question is that when somebody sets the goals and they have gross sales, profitability, and then all of a sudden they're off to the races and they do everything but really take a look and have a strong analysis behind that growth and what's creating that growth. So does that make sense to you?
Yeah. It's how, like you touched on the COVID, when everyone saw so much of this explosion, it's not just like saying, okay, we grew great, we'll probably grow like that again. It's, okay, why did we take this 100% jump in a 3-month span, and what can we project going forward? Is this sustainable? How do we keep it going?
Yeah. And two, I think it's obviously not as easy, right, as 20 or 21, but people are still doing it. Our clients are still growing really well by great margins. And for us, it's, okay, let's look behind the scenes. We did the podcast on the ROI on marketing, but more importantly, it's just from a financial standpoint, what I think is you have your goals, right? And ultimately say, what we like to do is we like to do a rolling 12-month, and then we like to do a 3-year, 5-year. Sometimes we do a 10, but for the most part, it's like 3 to 5 for the forecast. And we say, okay, you want to be, say, a $10 million company in 3 years, and you're starting at $1-2 million. Okay, so now we're talking about either a 10 or 5x growth, right? How is that going to happen? What's the drivers that's going to make that happen? And one is your business plan, or is your business set up for that kind of growth? And what are the different revenue streams that are going to get us there? And then we just start mapping that out. And then again, forward looking, right? So we have our 5-year bogey, 3-year bogey. Let's map it out. Let's year by year, what that growth is going to look like, and then how we're going to achieve it. Very few people achieve monumental growth without making big bets, without there's some type of resource, whether that's obviously money, time. So what are you going to commit to, and how are we going to measure that? And I think that's the infrastructure on how you really do intentionally grow your business and not just throw the pasta against the wall. So it's just really being intentional about setting out that ultimate goal, walking that back year by year, and then looking at what the drivers are to get you there and what that investment looks like. So
yeah.
What are your thoughts on that?
No, that makes sense. And I think in the entrepreneur world, the whole goal setting thing's huge. Everyone's write out your goals, set big goals, stretch yourself. And we talk about that on here, but I think the majority of people just stop there. Okay, I written it out. I'm going to 10x in 5 years. And it's great, but what is your actual plan to get there? And it's not just, oh, I'm gonna have more sales. I'm gonna hire more people. Let's look at exactly what got you to where you are, and then what do we need to adjust to get you to this goal that you set. It's marrying the two together.
I think the biggest revelation for our clients when they do this is they view limitations mostly on their time and some on their money, financial, but it allows them to really understand what they need to focus on. And they have this real revelation, like, I'm focusing on all this small stuff, and really I need to be focusing on the bigger stuff, the more influential stuff, the stuff that's really going to drive. So it's really just prioritizing their time and where their efforts need to be spent. And I think entrepreneurs miss this. I really do. I think like they miss where they should be spending their time. And what I like is, because when you do have those forward-looking financials and you do understand the drivers that you need to emphasize or spend the time on, that kind of allows you your compass on where you should be spending your time. And then it's what we talk about, course correct every month, but what you got to spend your time on. And then is it working or is it not working? If it's working, more of. It's not working, what can we do about it? Again, having those forward-looking financials dictate where you need to spend your time on those profit drivers and the income or the revenue drivers. And then that's where you need to spend your time.
Yeah, and I see this actually all the time. I saw this in the tax world, where you have all these business owners, right, where it's time to do their taxes, and they're combing through every transaction. Oh, wait, I have this $37 I spent at Walmart, and it was business related. Make sure you get that in there. And they're spending so much time trying to save a couple $100s on taxes. And then I think you have some of our more successful business owner clients, and they're more, hey, let's hit the big items. Let's make sure I'm in the right entity. Let's make sure all the big items on taxes are taken care of. I'm not going to worry about writing off every little pen and pencil I buy. If I miss something there, I miss something there, because my time is better served figuring out the big items in my business.
We all fall into the traps, right? Whether it's like, oh, I got to clean up my email box, or just different things that we spend, or going down rabbit holes on social media. But again, I think like mapping this out, being accountable to yourself, I think really helps you pull yourself out of that. If I were, obviously, I'm watching it every day. I think it really does, like, helps you focus on the important stuff, and it sets what you're gonna spend time on, and most importantly, what you're not going to spend your time on.
Yeah, so for sure. Yeah. I think in our position, we talk to so many people and see the results so much, you almost start to just get a feeling right from the start with people, like, oh, this person, their goal is to 5X and they're going to hit it. You can just tell by the way they're talking and the things they're focused on. And then, yeah,
I think I'm not perfect by any stretch of imagination, but yeah, you definitely can tell who's got more of a likelihood of being successful by their priorities and what they talk about and what they spend their time on. Yeah.
Yeah, that all makes sense. Hopefully that answers the question we got. But yeah, I think it sums up everything we talk about on this podcast, the forward thinking, the big stretch goals, and tying it all together, right?
Yeah, I would just let me just maybe our last piece is, let's let, for this question, what does this really look like? And what this really looks like is, right, you have a financial projection year by year for gross revenue, right, by revenue stream, right? And then to reverse engineer, right? So if you sell products, right, how many products, right? If you sell services, right, how many clients? And then, so you got to reverse engineer that, right? How many you need to get there? And then a lot of times they're like, my current revenue streams aren't going to get me to 10 million. So then we start thinking about, okay, what are some other revenue streams? Maybe not today, but year 2, year 3, right, to get to 10 million. So then, like, you have just a roadmap on the revenue. And then what we talked about, the investments, the resources, right? So then you start putting down, okay, team members, right? Number 1 is always like labor, right? 2 is, okay, what needs to be the fuel for my growth from a marketing perspective, right? So then we start, like you said, right, we see what's worked in the past, so we can get a general sense. We know things are going to change, right? But we get a sense of, okay, how much is, the acquisition cost of a client? How much does it take to sell one product? And then from there, we map that out. So we have a 3-year projection, we have a 1-year projection, and then that 12 month is like month by month. And then we just continuously, okay, how was March, right? How was April compared to what we thought it was, right? And then I tell you, like, step by step, and you course correct, and it's like you start seeing that growth chart go really well. Just to give the question and the audience a visual of what that would look like. And then you're the entrepreneur, you have your financial team. Every month you're looking at those numbers, you're diving into those numbers, looking at analytics, and course correct what's changed. And we always like to do the month and then the 90-day rocks. what are we working on, both in 30-day, 90-day perspectives, and then just incrementally. It's amazing, how all of a sudden it's right there for you. So.
No, exactly. And I think we talk about a lot. It starts with you've got to have those numbers in place and know where you were. You've got to be able to project those going forward. And if it's not something you're comfortable doing yourself, then you have to have a team behind you that's doing all this for you.
Yeah, and a sounding board. And I think it, like we talked about, sets up an accountability for yourself, which is super, super important.
Right. And I think even the clients that we have that 10 years out, they hit all these giant goals they have. They're not going to look back and say, wow, every plan we made worked out exactly as we thought. But just the act of doing that and getting in the habit of doing that and course correcting along the way is what's going to get you there. It's like that quote, whether it was, I don't know, Patton or Eisenhower, one of those war generals, the plans are meaningless when you're in battle, but the act of planning is priceless. Yeah. We didn't have to read that at the time.
Yeah, right.
So
cool.
Makes sense.
All right, let's wrap it up. Appreciate it, Josh. Thanks for getting together.
Yeah, thanks for having us. We love answering these questions. So if anyone else has any other questions about this, shoot them our way, and we'll get to them in a future episode.
All right, Josh. Hey, you take care. Thanks, everybody.
All right, see you next time.
Bye now.